Hello and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So today I'll be joined by Prudence Maximilian, all the way from Tanzania, and you're going to be seeing his face a lot more because we are planning to have even more sessions in Market Snapshots. So among the key highlights as of this moment is one of the biggest movers, which is oil, which opened the week with a gap down and has been moving down all morning, mainly as a result of OPEC Plus countries confirming that they are boosting oil output by at least 400,000 barrels per day. So, outside of that, we are also looking at other key highlights. European shares are little changed on Monday, usually a quiet day. So, unless we have any key developments, we don't expect much today. Turkey inflation continues to cool in April. Swiss consumer prices stall in April. Russia manufacturing PMI rises from a near 3-year low. Indonesia Q1 GDP growth weakest in 3.5 years. And gold rises on a softer dollar. So those are the key highlights as of this moment. So on this other side, looking at forex and how currencies have been trading since the day started, you notice that Euro USD has been a key mover, up 0.27%. AUD USD has also been a key mover, up 0.65%. New Zealand USD also 0.39%, pound 0.2%, meaning that most of these currencies have been gaining against the dollar. So we are seeing a weaker dollar across board. So on the commodities side, they're not doing per se very strongly. For instance, we already mentioned that crude oil has been moving downwards, currently over 2%, with Brent crude oil hitting $59.8, very close to this year's low. Natural gas, on the other hand, is moving opposite with a 1.8% gain. Gasoline and heating oil are both down, gold and silver gaining as well as copper. Soybeans down, whereas wheat, coal, and steel, as well as TTF gas, are all on the upper side, where lumber is down 0.63%. So clearly, it's a mixed Monday, and we'll be looking at the key highlights and things that we should be expecting across this week in the markets. So before we make any further progress, I would like to mention that this session does not constitute investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So, hello, Paul Carrier, and shout out to you for being the first person to join and comment. You can see Robert Cavalli in the house, Davis Ratemo, Marcelina, Smith Effects, Fast Tech, Tony, Rono. Thanks, guys, for joining, as well as Kevin Miner. So, let's get on to the next part of the presentation. So, hello, Charles Palmer, and thank you for joining. So the next part of the presentation is about the earnings season. And of course, we know that there is quite a good number of companies that will be reporting earnings this week. So on the week that runs from 5 to 9th May, we have quite a good number of SP500 reporting earnings. So among the key highlights is tech companies. If you look at BioChrist, we have BioNTech, we have Ocular Therapeutics. So there will be a lot of focus on the healthcare sector, but also we also be looking at companies in the food sector, such as Tyson Foods, Twist Bioscience, and of course there is quite a good number of tech and telecommunication companies, with the key highlight being that we will be looking at one major semiconductor company, that is AMD, or Advanced Micro Devices, which will be reporting earnings on Tuesday. So later on, we also be looking at, I believe, Palantir. Palantir is set to be reporting its earnings this week. Of course, the key highlight on Wednesday will be Walt Disney, which will be announcing its second quarter results. So quite a big focus on earnings. And of course, we know that there will be a major driver for the performance of the SP500, the NASDAQ, as well as the Dow Jones indices. So remember, we are just approaching the top or the peak of the earnings season, where most of the companies are expected to be reporting this week. And of course, last week we had major tech companies reporting. We had major companies performing really well, and as a result, we saw all the US top equity indices moving higher and reclaiming some of the lost territory where there was panic selling during the Trump's tariffs around Liberation Day. So outside of that, we have a major event happening this week, and this is the Fed rate decision. So this is happening in 2 days. That should be Wednesday. And the next Fed decision has had a lot of mixed reactions in the market, where so far the market is predicting with a 99.5% probability that the Fed will be holding interest rates steady at the current level, which is a range between 4.25% and 4.50%, with a very, very small chance of the Fed cutting rates, which is 0.5%. So we know that last night, US President Trump was speaking, and he mentioned that he will not be looking to fire the Fed Chair Jerome Powell, but at the same time, he keeps insisting that the Fed needs to consider cutting rates. But so far, the Fed is not willing to cut rates on this meeting. Of course, they are still waiting. And of course, with the strong jobs data that we saw last week on Friday, then there is a good chance that the Fed will be banking on the good data report, where employment is strong within the US economy and inflation is still moving considerably towards the 2% target, which makes it likely that the Fed will be holding a lot longer and maybe they will be cutting rates on the next meeting. So if you look at the next meeting, which will be on the 18th of June, the market is already pricing in a cut with a 33.5% probability. If you move on to the July meeting, then this is where we have more than 50% chance that there will be that cut with a 55.9% chance. Then in September, we still see another drop from 4% to 3.75% with a 51% probability. And of course, in October, then we see the potential of the rates remaining between 3.75 and 3.50%. And the last meeting this year will be on 10th of December. And of course, you can see the main average is basically showing that the market is expecting rates to be around 3.5%. So clearly, a potential probability of 75 basis points rate cut for the rest of the year, which would likely imply 3 cuts. So Fed's Powell is about to defy Trump and hold rates steady. Things are getting awkward for the Federal Reserve. With their eye on inflation, officials are inclined to hold rates steady when they meet in Washington on Tuesday and Wednesday. But fears of a slowdown are mounting, and President Donald Trump and some of his deputies keep hammering the central bank for an interest rate cut. So besides the better performance of the job market sector with the non-farm payrolls last week on Friday, we also saw the US economy printing negative GDP growth, meaning that the US economy was contracting in Q1. Caught in that bind, Fed Chair Jerome Powell may have been comforted by government data on Friday, showing a healthy 177,000 jobs jump in April payrolls. As long as the labor market holds firm, the Fed can more easily justify standing pat. Meanwhile, the Fed's favored inflation gauge showed price pressures continued to slowly ease. While Powell and Co. would typically welcome such a cooling, higher US duties on imports risk upending the progress they have made on inflation. So in an interview on NBC's Meet the Press with Kristen Welker that aired on Sunday, Trump insisted he doesn't plan to fire Powell despite his sustained criticism over the pace of rate cuts. Indeed, uncertainty is the dominant factor now for major central banks around the world. The White House is pursuing deals on the tariff front that could once again shape the landscape, a nightmare for anyone trying to forecast future economic conditions. So clearly, it's a developing story, but of course, from the Fed funds futures, there is that expectation that we should be looking at a potential hold on the meeting that happens this Wednesday. So on the other hand, it's not just the Fed that is having a meeting this week. There's another central bank. In this case, it's the Bank of England, and this will be on Thursday at exactly 2 p.m. So in this case, we're expecting that all the Monetary Policy Committee officials will be voting in unison that they cut interest rates by 25 basis points from 4.5% down to 4.25%. So this is the the big event besides the Fed. In this case, expected rate cut on Thursday for the UK economy. And this is expected, of course, to weaken the pound. The pound has been a pretty strong currency over the last couple of days. And this is mainly because interest rates have remained strong in the UK compared to any other economy. So besides that, if you look at the economic calendar and try to understand the key movers and the key events per day from Monday to Friday, then this morning's CPI, and this is from Switzerland, is more likely the bigger mover, where inflation month over month was at 0.0%, which is the same as the previous reading. We expected a 0.2% increase in prices. So this basically indicates that prices are not moving much in the Swiss economy. And with this kind of performance in the market, then it basically means that the Swiss economy could be facing deflationary pressure. And that is usually not very good in the markets. Of course, it could lead to a reaction. So in this case, if you do a line chart, you'll notice that inflation hasn't been moving much in the Swiss economy. So in that case, the Swiss National Bank was the first to cut rates, and it has been cutting so far, currently at 0.25%. And with inflation remaining lower than expected, then a good chance we should be seeing some form of injection to try and support the Swiss economy. In this case, we are potentially looking at a much weaker Swiss franc. So outside of that, we have the ISM services PMI for the US. This is coming up at 5 p.m. later today. So we also had the 4:45 p.m. final services PMI. Of course, the ISM is expected to have more impact. So the way we read this data, as always, is that 50.0 is the midpoint. So values that are below 50.0 show a contracting sector, and values above 50.0 basically show an expanding sector. So in this case, we're expecting a slowdown from the previous reading of 50.8 to 50.2. But if we happen to see a much bigger number, let's say 50.8 and higher, then that would likely show that the service sector in the US is strengthening. And as a result, it would be strengthening for the dollar. Of course, much weaker than expected services PMI would also likely weaken the dollar. So we'll be getting a host of economic news on Tuesday. And this will range from China's Kaizen Services PMI. We'll be getting the unemployment rate from Switzerland tomorrow morning at 8:45 a.m. Then we'll be getting a speech from Swiss National Bank Chairman Schlegel. This is at 10:35 a.m. And of course, we'll be getting final services PMI for the euro and for the UK economy before focusing on the trade balance from Canada at 3:30 p.m. So the trade balance will be very important, especially for Canada, mainly as a result of the tariffs that US President Trump has applied against Canada. So we'll be looking to see the impact of that trade balance, the impact of those tariffs on the trade balance, mainly because the US is the main trading partner for for Canada. So this has the potential of making big moves on the Canadian dollar. So Wednesday, this is when we get the real juice, beginning with the jobs data from New Zealand. Here, we're expecting unemployment rate to spike higher from 5.1% to 5.3%. Of course, this is likely to make big moves in the New Zealand dollar. Of course, a rising unemployment rate would pressure the Reserve Bank of New Zealand to consider cutting rates. And of course, that would be negative for the New Zealand dollar. But then if the job market is stronger than expected, then that would likely support the New Zealand dollar. So, of course, we'll get the crude oil inventories at 5:30 p.m. Of course, decrease in crude oil stocks would basically imply scarcity in oil, and that would boost prices. But then, if there's an increase in stocks, then that basically means there's plenty of oil, prices tend to move lower. So the Fed funds rate, in this case, we have a very high probability that the Fed will be holding rates. So, of course, the key focus will be on the FOMC press conference at 9:30 p.m. So, if Jerome Powell hints at a potential rate cut for the next meeting, that would likely pressure the dollar lower. But then, if he hints at holding rates higher for longer, then that would likely support the dollar. So, then we'll be getting the UK interest rate decision. Of course, in this case, if there is a rate cut, that would likely weaken the pound. But of course, we also be following up on the press conference later. So once we get the report, we go through the monetary policy summary, and of course the speech later. This should be around 11:40 p.m. on Friday. This is the Bank of England Governor Bailey speaking about the rate decision. So in this case, from the speech, we'll be able to tell the direction that the Bank of England is taking. So if they are pro cutting rates further, then that would weaken the pound. If they are pro holding rates higher for longer, then that would support the pound. Then we have the Canadian jobs report. We expect unemployment rate to remain steady at 6.7%. But then the number of new jobs created is expected to jump to the positive from negative 32.6K in the prior reading, in this case to a positive of 24.5K. So a strong job market report would likely support the Canadian dollar. And of course, a weak one would be negative for the Canadian dollar. So as we approach the end of the week, we'll be getting some news on Saturday. So if you tend to hold your trades over the weekend, then you should be concerned about the CPI from China, which will be coming up at 4:30 a.m. on Saturday. So outside of that, if there's any other highlights, I would like to check real quick. So yes, we have this. Oil tumbles as OPEC Plus accelerate output hikes and surplus rooms. So oil prices fell more than $2 a barrel in Asian trade on Monday as OPEC Plus is set to further speed up oil output hikes, spurring concerns about more supply coming into the market, crowded by an uncertain demand outlook. So Brent crude futures dropped by $2.21 or 3.61% to 59.08 a barrel by 6:53 GMT, while US WTI crude was at $56 a barrel, down $2.29 or 3.93%. So both contracts touched their lowest since April 9 at Monday's open after OPEC Plus agreed to accelerate oil production hikes for a second consecutive month, raising output in June by 411,000 barrels per day. So the June increase from the 8 will take the total combined hikes for April, May, and June to around 960,000 barrels per day, representing a 44% unwinding of the 2.2 million barrel per day of the various cuts agreed on since 2022. So the May 3 OPEC Plus decision to raise production quotas another for 11,000 BPD for June adds to the market expectation that the global supply-demand balance is moving to a surplus. Tim Evans, founder of Evans on Energy, said in a note. So the group could fully unwind its voluntary cuts by the end of October if members do not improve compliance with their production quotas, OPEC Plus sources told Reuters. So in this case, with this kind of increase, of course, we should be expecting to see more pressure on oil prices towards the lower side. So on the tariff side between Trump and China, yesterday Trump said he wants a fair deal with China. So US President Donald Trump on Sunday said the US was meeting with many countries, including China, on trade deals, and his main priority with China was to secure a fair trade deal. Trump told reporters about Air Force One that he had no plans to speak with Chinese President Xi Jinping this week, but US officials were speaking with Chinese officials about a variety of different things. Asked if any trade agreements would be announced this week, Trump said that that could be very well be, but gave no details. So Trump's top officials have engaged in a flurry of meetings with trading partners since the president on April 2 imposed a 10% tariff on most countries, along with higher tariff rates for many trading partners that were then suspended for 90 days. He has also imposed 25% tariffs on autos, steel, and aluminium, 25% tariffs on Canada and Mexico, and 145% tariffs on China. So he suggested that he did not expect to reach an agreement with some countries, but could instead be setting a certain tariff for those trading partners in the next 2 or 3 weeks. It was not immediately clear if he was referring to the reciprocal tariffs announced on April 2, which are due to kick in on July 8 after a 90-day pause. Trump repeated his claim that China has been ripping us for many years on global trade, adding that former President Richard Nixon's move to reach out and establish relations with China was the worst thing that he ever did. Trump sounded more upbeat about China and the prospects for reaching an agreement in an interview with NBC News that was taped on Friday and broadcast on Sunday. So in the interview, he acknowledged that he had been very tough with China, essentially cutting off trade between the world's top two economies, but said Beijing now wanted to reach an agreement. We could have gone cold turkey, he said, and that means we are not losing $1 trillion, but we are not doing business with them right now, and they want to make a deal. They want to make a deal very badly. We'll see how that all turns out, but it's got to be a fair deal. So clearly, what we are seeing here is a deadlock between China and the US. None of them has decided to bend the knee. China hasn't approached US. Trump himself hasn't approached China. So yes, they are only talking of officials sent to and fro, but so far, not much progress. So what this means is that we could likely see gold trending higher this week as a result of this deadlock between the two top economies. But at the same time, other countries have been sending representatives to the US to negotiate with Trump. And of course, he didn't rule out any updates this week. So if we see any updates, especially concerning the UK, Japan, or even the Swiss economy about a trade deal, then that would likely rattle the markets. So be on the lookout for that. So among other news, we know that last week, as we approach the end, Warren Buffett did his annual meeting. And of course, during the annual meeting, he announced that he will be retiring in just over a year. So long fought journey in investing eventually has come to the end of his journey. So outside of that, I don't think there's any other major news. So we can jump straight to some technical analysis and try to understand where the markets might be headed next. So as we proceed, let's check if there's any questions. So good question from Morning Rufus. Which are the main news where you'd stay out of the market despite all your confidence in line? It's the top two events, the Fed rate decision and the Bank of England rate decision. So those two events are bound to really move markets. So if I had a position in the USD, then I would stay out when the Fed is making its decision. If I had a position in the pound, then I would stay out before the Bank of England rate decision. So those are the two key highlights for the week. So another comment here, will Trump plan 100% tariff on all movies produced overseas, move markets this week? I would rather listen to the Disney earnings call. So we have mentioned that Disney is reporting earnings this week. Of course, during the announcement of earnings, they will also be doing an earnings call. So also take note that Coinbase will also be reporting earnings this week. So Disney would be a more likely mover. So let's see what happens during the earnings call. So the earnings call is after company reports its earnings, they will usually do a meeting, which is very public. And during the meeting, they will basically share about how they might be affected. So while Disney will share its fiscal year 2025 second quarter results and its perspective on the prevailing macro environment when it reports financial operating numbers before Wednesday's bell. So another one from Wangari Patrick. Morning, with the impending BoE rate cut, can you expect the market to start pricing in the cut as soon as today, or we should wait for the week to progress? Again, could pound yen be the best pair for this? So, of course, we should be expecting to see much more weakness in the pound earlier in the week rather than wait for the eventual date. So, more likely that we should be seeing some activity. So on the question of pound yen, so of course this makes more sense. Since the week started early this morning, we have seen the yen being pretty strong compared to other currencies. So if the pound is bound to weaken over the week, then it's better to pair it with a stronger currency. So pound yen might be a favorite pair going forward. So China denied that there are talks with the US. Yes, China denied, and Trump has been insisting that they have official talking. Of course, the two countries cannot be like fully quiet against each other. It's only that there are no official meetings or negotiations. Trump hasn't met or talked with Xi Jinping, and we shall continue waiting until we have a formal update. So, good question here from Caroline. What's your thought process when approaching the market for analysis and trade execution? I think we have sufficiently covered this on the novice to pro course. It's available on the FX Pesa YouTube. Basically, takes you through a step-by-step process of understanding how the markets work. So, I would likely recommend that you check the novice to pro from the FX Pesa website. Here I go step by step from introduction, charting skills, tradable assets, know your candlesticks, market structures, trading strategies, risk management, understanding market news, building a trading system, and eventually trading like a pro. So make sure and feel free to check it out. As we approach the next part, which will be presented by Prudence, I will be answering the last two questions. What does it mean when a currency has a bank holiday? So a currency can't have a bank holiday. It's a country that will have a bank holiday. And that basically means that their banks are closed for that particular day. So when there's a bank holiday, for instance, today in Japan, it means that the majority of the Japanese banks will be closed. So it basically impacts the liquidity for that country's assets. So if you're trading, let's say the JPY, you know that the markets will be trading on low liquidity for that particular day. So in that case, we don't expect much of a move. So markets tend to make more moves when there's increased liquidity, but also a lack of liquidity. If a currency is weak, it could weaken further. If it's strong, it could strengthen further. But mostly, whenever there is a bank holiday, the moves are much more limited. So are tariffs going to affect services? US economy is majorly services. It's a matter of wait and see. So that's why we are focusing on the ISM services to see how much impact they have had from the tariffs in the last 1 month. So that will be pretty interesting take. And of course, the last question here, thoughts on JPY pairs. We know that the Bank of Japan has been one of the central banks that has been most aggressive, or I would say the most hawkish on hiking rates this year. So in this case, we have been seeing a lot of investors buying the JPY. JPY has been on a good positive trend since the year started. So my thoughts are that the JPY might continue to strengthen for the rest of the year. So last comment here, could you comment about trading NASDAQ 100 during the London session? The London session is usually not the best to trade the NASDAQ. I would most likely prefer trading it during the New York session. So in most cases, you will see the NASDAQ taking swings during the Sydney and Tokyo sessions. And then you could be seeing a swing happening in the London session. But then the New York session is where all the liquidity is unlocked. And this is when we see most volatility in the NASDAQ, which creates trading opportunities, most often are retesting the previous swings that we have seen in the earlier morning sessions. So that's it for my side. Hi, Prudence, and welcome to the market snapshot.
Okay, thank you so much, Rufus. Good morning once again, guys. My name is Prudence Maximilian. I'm the education partner FX Pressa Tanzania, and I'll be sharing my insights here with you in this segment of market snapshots. And of course, we all know that trading is either buying or selling. Now we are speaking on trading side. Rufus has shared with us the fundamentals that are going to affect the markets in this week. But also, apart from the fundamentals, we all know that you must have a lot of reasons that are going to push you to make a certain trading decision, either it's a buying decision or selling decision. And of course, we don't rely on fundamentals only, but also we touch a little bit on technicals and read the charts and see where the markets are likely to move to. So in today's insights, I'm going to share with you on what is likely to happen in the major currency pairs, but also in anything that you are trading, specifically on technical way. So I'm going to display, or I'm going to present my charts here, and then we'll start seeing what is likely to happen there.
Hi, Prudence. Are you able to share your screen?
Hey Rufus, I'm not able to share it.
Let me check on my side. Just a minute.
Yeah.
All right, Prudence.
Yes, Rufus.
Yeah, as we wait for Brandy on the other end, let me do a couple of analyses and
Yeah,
then we'll
yeah.
take.
The issue that when I want to present,
Yes.
it does not show me the window for trading view. So it is showing me the window for StreamYard.
Should be what? You're presenting share screen, and then under Chrome tab, you'll find the area to select the tab you want.
So I had to use, I had to log in my trading view
Yeah.
through this browser.
Kindly try again. Right. As you try, let me analyze a couple of charts here.
Now, okay.
So, apologies to our audience. So, this is what's happening with Brent oil. So, after the OPEC decided to expand by 411 barrels per day, you can see that the market opened with a gap. So, we had a new low, lower than last week's low, with Brent oil going to 58.657. But then, since it was a gap, it seems like the market is trying to close the gap. So clearly, we are seeing a mean reversal here, with the market making a big move down and now immediately attempting to close this weekend gap. But nevertheless, we expect more weakness. So more likely, we should be seeing the market progressing lower once we close the gap. So might be an interesting idea looking for opportunities in this one. So as for European equities, there is a peculiar performance of the France 40 stock market index, which opened with a gap down. Notice the closing price on Friday and the opening price this morning. So most likely over the course of the week, we should be seeing the market attempting to close this gap. So at some point, once we see evidence of buyers coming back, we should be looking forward to the market closing this gap. So the Spanish stock market index has basically recovered 100% from the earlier sell-off that we had seen in the prior 2 months. So the sell-off was a 16.65% pullback. The market has recovered 100%, and most likely we should be seeing a new all-time high today. So be on the lookout for this particular resistance, because once the market breaks, more likely we'll be seeing a stronger push higher. So for the German stock market index, yes, we are looking at a more recovery, almost 100%, and getting back to a new all-time high. So this week, we should be expecting this move to extend and get to around 23,487 per share. Then for the Euro stocks, it's a little bit slower in recovery, but yet are still moving consistently higher. So despite the earlier sell-off in the first 2 hours of the day, it seems like buyers are attempting to push even higher for the day. So as for gold traders, we know that we had this channel moving downwards. We had a breakout retest continuation, but that didn't hold. And now looking at a weaker dollar at the market open today, it seems more likely that gold will be recovering from these price action levels this week. And of course, we know that we have a trend line to follow here. So most likely we should be seeing gold taking advantage of the weaker dollar and moving higher, with targets being around the upper trend line, around $3,311 per ounce of gold. So far, what we are witnessing here is a change in trend. So the trend line is now following this path here. So we can confidently say that gold is trading inside a channel. And if this is our channel, this is the overall or the average movement in gold. And in this case, we're just bouncing from the lower side of the trend line, moving towards the upper one. In this case, we are expecting the price to rally and get to a high that we saw last week on Wednesday. So around 3,311. So for US equity indices, yes, we are seeing a very strong bounce. The GDP didn't help much last week, but then you can notice the pullback didn't hold for long, and the equities continue trending higher. So from the 1 hour time frame, you will notice that it has been a gradual progress higher, and our targets for the prior 2 weeks have already been hit, and now we are looking at an extension of the bullish momentum. Of course, the market is struggling around this area here. Notice how the area has been super important. So just screening my chart of the prior analysis. So I'm talking about this bottom here and this top here. This area has been pretty important on the Dow Jones, but then as of last week, we managed to break towards the upper side. So now looking at the 1 hour time frame, despite pushing higher last week on Friday, then it implies that the market could be seeking some liquidity here. Then from this area, a potential bounce, and the market continues moving higher. Of course, with the targets being the previous highs around 42,557. So for the Nasdaq 100 index, we're also seeing the same thing, same kind of performance. This was a prior high. The market broke, retest, and continued, but then didn't quite get to the previous high. So the previous high was all the way up. And now that we are seeing a pullback as of this morning, more likely we could be seeing the Nasdaq retesting the lows that we saw on Friday, and then potentially bouncing from there, and then we move higher. So it's also the same for the SP 500. So we are getting some nice pullbacks. More likely the market will be continuing with a strong bullish momentum. In this case, the new target for SP 500 will be 5,782. So for the Nikkei 225 index, we have also seen a very strong bounce and recovery from the earlier sell-off. Of course, the initial move started around here. So most likely that we will be seeing the market making a recovery and pushing a bit higher to 37,696. So this is our new target here. But then now that we are seeing a pullback as the week starts, of course, that should be a good preparation for looking for more bullish positions. So on the other hand, we have the UK stock market index, or the FTSE 100 index. This has been the strongest as of this open of this week. So notice how we've had a strong momentum since last week. So of course, we should be expecting to see even higher performance. So from the daily time frame, notice how we are almost 100% recovery from the big sell-off here. But then, given that we're expecting a rate cut later in the week, then it should likely imply that we move on higher. So a rate cut is quite taken as quite positive for the stock market. It makes cash cheaper. So in this case, we could be seeing the index continuing with an impressive recovery. So we had a question on USD-Yen. Of course, notice how the dollar has been weakening against the yen. So from the 4 hour time frame or from the daily time frame, we had this strong bounce from this particular support area here. And then since we got that bounce, we had the market moving to a major resistance area, pulling back down. And as per our analysis last week, which did not go quite as we expected, was that the price would get to this area and get all the way back down. So what eventually ended up happening is the market making an even stronger rally to this resistance area. And then after getting to last week's high, notice how price changed immediately, attempted to bounce, and now we are seeing a further push downwards. So this means that we are likely to see even further downwards momentum. In this case, the dollar weakening against the yen towards 143.224. So trying to confirm if at this point Prudence is still able to share his screen. Hi, Prudence.
Hello, Rufus. I'm not able to share, so you can on them.
Kindly try again. You click share or present, and then on the pop-up window, make sure you select the Chrome tab, not the window or the entire screen. Then we see if it doesn't work, then we wait for the next session.
Yeah, the issue that my trading view is not logging to that browser. That's the issue. So next time I'm going to log in to the browser, and then it will be very easy for me to present.
Yeah, that makes sense.
Yeah.
All right. So we still have a few charts to walk through. Of course, we have our main majors, which is the Euro USD and Pound USD. So Euro USD is looking likely to form hot rooks like a head and shoulder formation. So head and shoulder formation would more likely have a head and shoulders on each side. So if you consider these as the first shoulder and you consider these as the head, then this is what we are looking at. And of course, the market is currently retesting the neckline. So if this is the formation we are seeing in Euro USD, and these are the 4-hour chart, so these are price action history for the last 3 weeks. So with the last week's high being unable to beat the prior week's high, then the neckline holding here as a key level support, then most likely we could be seeing a reversal where the euro now starts weakening against the dollar. So this price action area seems pretty significant as a key level resistance now potentially turned into support. And if you look at this in a 1-hour time frame, then it means that most likely we could be seeing a big drop to 1.10979. But since that hasn't happened yet, we should be observing this price action area here and wait for an eventual break. So if the break happens here, then that could be a trigger for a short selling position. And on the 4-hour chart, that's how it looks like. But then if you look at the pound USD, in this case, we are looking at one currency that is facing a potential rate cut later in the week. Of course, we are looking at sideways momentum over the last 2 weeks. So it's within limits to say or accept that last 2 weeks have been more of a sideways momentum. So if we had to summarize the price action from here through to here, then we would definitely just say that this price is moving this way. So in this case, this means that there is a likely potential for a breakout, and that breakout could most likely emerge here, and the chart looks quite similar with the Euro USD. So in this case, we could be seeing the pound weakening to the dollar and breaking below 1.325. So for AUD USD, it eventually made the breakout. Notice how we had more than 2 weeks of sideways price action. Eventually had the breakout, retest, and continuation. And it seems like this currency pair is trying to move on to the next level. Of course, the key level target would be around 0.6549 with this kind of increased momentum. Notice how the price action on Friday and now on Monday is showing some strength against the dollar. So outside of that, trying to find which other currency we haven't checked. So we have the dollar trading against the Swiss franc. We mentioned that we expect the Swiss franc to be weakening out of the current challenge we are seeing with Swiss inflation. So after the strong rally to cross the gap that was there at market open, now we are seeing the market pulling back downwards. And of course, from the 4-hour time frame, this is how it looks like. So we have had the Swiss franc really struggling to make gains against the dollar after the strong bearish momentum that we can see started around February. So since then, the dollar has just been weakening to the Swiss franc. Here on the 4-hour chart, notice the attempt to move higher is only being met with more selling activity. Of course, if you try to map this area versus this area, then you'll notice how much of a sideways momentum this has been. So here to this area here, we can say this market has been moving sideways for like 2 weeks. So now after the closing the gap from earlier on at market open, so the gap wasn't much, but it was there. So market went up, closed the gap, and now we are seeing the price attempting to push back downwards. Of course, the target will be the day's low around 0.822247. So as for New Zealand USD, here we are looking at a market that managed to break towards the upper side. So despite trading in hot root like a channel, notice how we had this kind of price action here. Also notice how we had the market consistently following this path. So on average, we can say that this price was basically following this path. So towards the end of last week, we had a break towards the upper side, and then after a retest, we are seeing a potential continuation. And of course, we know that as a book pattern, we normally see this breakout extending all the way to the top of the pattern, so around 0.60252. Of course, this rally could happen on the back of a weaker US dollar. So on the BTC side, we have seen a very strong rally from last week, where price moved from here all the way up, gaining by about 31%. So now what we are looking at here is a pullback that happened on that over the weekend. This was Saturday and Sunday, and then Monday even further. But now we are seeing the market bouncing strongly. So clearly, after the pullback, it seems likely that we could be seeing a nice bounce from these areas here. So notice the 4 candlestick had a strong rejection. So we could be seeing the market extending to $100,000 per Bitcoin this week. So I think I've reasonably covered all the assets we expected, save for one, which is USD CAD. So the dollar has been pretty weak against the Canadian dollar, but then last week it had a nice bounce on Friday, and now it seems like we're extending the bullish momentum with a likely retest of the upper trend line, which has been pretty consistent for the last couple of weeks. So in this case, we expect to see the market retesting the upper trend line here, and the price action area is around 1.38402. So that's it for the day. Thank you, everyone. Thank you for your time. If you enjoyed the session, consider sharing it. If you are watching this on X, consider liking and retweeting the live video. If you're watching on YouTube, consider subscribing to the channel. And if you have any follow-up comments, remember to drop them in any of our social media pages at FXPesa. On X, it's at FXPesa Official. So if you are just new and beginning your trading journey, make sure to check out the Novice to Pro course. It's available on FXPesa YouTube. So an easy check. Let me show you. Just search Novice to Pro. You'll find it here. Also remember that FXPesa has a podcast. It's called The Bullish Banter. So if you go to the FXPesa YouTube page, and then you check out the Bullish Banter podcast, then you'll notice that we have our latest episode out where we invited and hosted some of the top traders in Uganda as well as in Tanzania. So the most recent episode is already out. So outside of that, if you want to register for a trading account, check the links in the description below. Register and we'll help you create an account. You'll get a free demo account to practice before you go on to a live trading account. So checking the last questions before we end the session. So I'm a student at the university, resuming my semester soon. I started trading indices recently because they align with my strategy. What would you advise a student studying 8 to 4 p.m. or 6 p.m. to achieve? I don't know the mean in terms of dollars. So if you're a student, know that the market is not going anywhere. So the more you practice and have this skill by turning up in the markets every day, the more you internalize and have this skill, and then the rest will be about scaling and making sure you have the necessary funding to make sure you are running better, bigger, and better account. So for now, if you're a student, it's good that you're starting early. Put in the work every day, turn up every day, and then the rest will be history. So last question I'm seeing here. So considering the fact that the USD has been pretty weak and we do not have anything much to boost its strength, the uncertainty with China continues. How likely is the EU head and shoulder bound to hold true? So it's mostly that despite everything that is happening, the dollar is still the world's reserve currency. So whenever the dollar weakens and you see a continued week by week weakening, eventually the dollar doesn't sleep for long. Eventually it picks up. So we should be expecting to see at some point the dollar making some recovery, and that recovery would most likely determine the Euro USD drop. So also remember, for the dollar index, the basket of 6 other currencies, the euro has the strongest weight. So in this case, if the euro has been making strong moves against the dollar, then that has been impacting the dollar valuation. So it just doesn't have to happen from one side. It could be on the other side, where the euro is the one structurally weakening. And if the euro is the one structurally weakening, then the the expected outcome is the dollar making some gains against the euro, and of course against the other currencies. So that's it for the day. Thank you very much, everyone. Enjoy the rest of your trading week, and I hope that you have a profitable trading week.